Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Arbitrum and its token ARB. None of the content is financial advice. Let's get started. Arbitrum has been rallying quite a bit over the last last 24 hours, up by about 0.75% or 3/4 of a percent. Over the last 7 days, it's the most rallying crypto, up by about 10%. Over the last 30 days, up by about 33%, and over the last 90 days, up by about 50%. You can check that out on the price chart over here. The last 90 days or so ago, the price was at around 26 cents. It's now essentially 2x to 59 cents. In terms of how the price action over the last several key performance periods has rallied is, first of all, went to its lows in April of 2025 and then came close to that drop in to that level back in late June of 2025. From that point on, the price rally did go above the 20-week simple moving average, which is currently at around 39 cents, and 21-week exponential moving average at around 44 cents. Together, these moving average to the downside provide some support, at least in the short term, if there is a correction, and to the upside, that the 0.23 fib level is at around 74 cents. So that's a key level to watch. In terms of how the on the website, how the current risk reward looks per the regression based interpretation, the polynomial regression analysis wrapped around the daily price of Arbitrum. Again, this is a newer crypto launched in 2023, did have distinct highs in 2024. But what we need to see, again, not financial advice, is not just the price action, especially with the tokenomics not being that ideal at this point. At the total supply 10 billion, out of which only about 52% is in circulation. You can see this is the price action chart throughout the price history. This is on coin market cap, but if you toggle between price view and the market cap view, you will find stark contrast. Now the price is at around 59 cents. It was essentially 4x higher in early January 2024 and also in March of 2024, essentially at around $2.20, whereas the market cap back then was only 50% higher to what it is today. So back then the market cap was 4.5 billion, now it is 3 billion. You can see the stark contrast between the market cap chart and the price chart. Price chart has made several lower highs and lower lows, whereas market cap chart is range bound, and one could even argue it's making a macro higher low structure on the market cap chart. That means there is a lot of growth in the market cap, but that growth is not getting reflected back in price. The reason being token unlocks. Lots of token unlocks happening for Arbitrum. Again, nothing against Arbitrum as a product or a endorsement, or if it's not an endorsement of its fundamentals or anything, but just the statistics are pointing to a lot the unlocks being flattening out sometime in early March 2027. Again, towards the end of the bear market year, this could be an interesting token to look for, as that token unlock goes above 60%. It will keep a close monitoring on this Arbitrum over here. And again, you can see we did make several videos as and when the price action was at some of the key levels 5 months ago, and also 1 month ago, related to Arbitrum. 5 months ago would be April of 2025. Back then the price was at around 26 cents. We did analyze its potential in terms of the regression based, and back then the regression based risk levels were at around the best time to DCA Arbitrum. When we made the video, you can check that out. Back then the regression based risk levels were less than 10% over here. April 8th of 2025, that was the low in terms of risk levels, at around price at around 26 cents. Now the price is slightly higher than the polynomial regression based fair value. This fair value estimation is based on the hypothesis that the token goes undervalued and overvalued as the wider crypto market goes in the bearish phases and the bullish phases. Essentially, whenever the price is close to the fair value or slightly below the fair value, especially if you draw one standard deviation residual away from the fair value, this dotted green line, and accumulating any time when the price is close enough to this dotted green line or price is below the dotted green line, historically speaking, has been a great entry point. The opposite is a great exit point whenever the price is 2 standard deviation above the fair value. That is coming currently at around 75-76 cents, confluent with that 0.23 fib level. Again, these two models are distinct, they don't interact with each other, but still there is an area of confluence at around 75-76 cents in the short term, right? That would be about from the current price of 60 cents to 75 cents. That would be essentially close enough to 30% gain if the price were to go to that 75 cents level in the short term. If you were to extrapolate this peak, again, not too much into the distance, again, we like to stay let's say towards the end of October 2025. This if that upswing were to stay intact, the dotted trade line could be somewhere at around $1.45 to $1.50 in the later part of October to early November 2025. That could be a key area to look for in terms of a market cycle peak for Arbitrum at that level and slightly higher than that level. If we were to look for the 20-week simple moving average price based risk levels, it's currently at around 0.57 risk. In December, it did go to 0.76 risk. If it were to replicate that kind of a move, the price could be between $1.21 and about $1.33 for this 20-week simple moving average price based guidance. This time around, again, this model also did a decent job of identifying when the price of Arbitrum was sufficiently in a low risk environment like it was back in early April 2025. The time weighted average price model is indicating that the time weighted average price is in a free fall, this blue line, which denotes what's the kind of price that the underlying token, that is Arbitrum, could digest in the bull market, provided it goes slightly below in the bear market and accumulation zone below the time weighted average price, with the hopes that the price eventually rallies in the bull market is not the worst idea. But again, the line has not flattened yet. It's currently at around 91 cents, so that could be a key area to look for, somewhere close to that 0.382 fib level. If the prices were to go higher than the current all-time high that was set in January 2024 at around $2.36, the first level to watch for is at around 1.61 at around $3.62 per the technical levels for Arbitrum. All in all, that estimated bull run peak with that hope of the regression based risks and time weighted average price risk and the simple moving average price risk for Arbitrum is at around $1.56 at this point. That again, with the data that is available for now, that this is the estimated bull run peak at around $1.60. The thing with altcoins is that oftentimes they do exhibit some sort of a euphoria move. Right now it's largely controlled by Ethereum and Ethereum related narratives. Again, Arbitrum being one of the layer 2 on Ethereum is definitely one of the reasons where the price action has reflected the relative overperformance of Arbitrum with respect to its peers. You can see most of that Ethereum related coins are rallying right now over the last 90 days, ETH being the leader, followed by Uniswap, which is ETH's DeFi platform, then Link being the third spot, and the fourth spot is taken by Arbitrum. All the four are part of Ethereum ecosystem. So with that kind of background in mind, if let's say Arbitrum on its ETH pair has a significant short of outperformance, then that could also pull the estimated bull run target slightly higher for Arbitrum. Again, a 2x of that 1.60 target would be close to that $3.60 target at around 1.618 Fib level. So that is again theoretically possible. Again, none of the content financial advice. With that, I would like to conclude by saying first area of confluence across multiple models at around 74.75 cents. Then the second area at around 0.618 Fib level at around $1.56 across both the Fibonacci models and the estimated bull run peak scenario and the extrapolation of the regression based two standard deviation residual. If there is a new high, then the target to look for is at around $3.62. With that, I like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.